Hello, everyone. Once again, it's a Friday. It's the day that we all look forward to the most. Let's be perfectly honest. Not because it's the weekend, not because we can recharge our batteries, but it's because we can hear from Mr. Graham Nicholson of Cornhill International Payments about what has been happening in this week. During this week, it's been up and it's been down. Graham, what's been the crack, mate?
Well, I started off with a little song, Let's Go Round Again. If anyone wants to join in, they can.
I'm sure they
Here
will.
we go. That was in the Forex week this week. Start of the week, we had a bit of a battle on between the US yield curve trades and the stocks. They were
Yeah,
jumping between one and the other.
yeah,
When one deal was higher, they'd switch it over. Two things happened. We had soft US CPI inflation out on Tuesday, and
hmm
then we had a really good US bond auction that came out on that evening,
yeah,
and it went really well, and it was a decent price as well.
hmm
So the yields, they took the heat off the yields, and the stock markets come out winners of the battle.
absolutely.
Wall Street, we're 32,500 we are.
Yeah, new
And
record.
we all, this morning, we're a smidge of 30,000 on the Nikkei,
Yeah,
and China's on almost all-time highs.
absolutely.
Um, as we said, you put your money where the wealth is, and you put your money where you get your returns on. Did we not?
Absolutely. Yeah, it's all been about yields. It's been crazy. It looks like, however, just to pour a bit of cold water on things, it looks like the future market is going to point to a negative open today because bond yields are starting to creep a bit higher. And
Oh, that was my
interestingly,
sting in the tail. You're taking my thunder away.
well, this is it. But also, I'll tell you one thing that I did say just on the topic of gilts, and this was in the FT this morning. Japanese investors buy UK government bonds at record rate in early 2021. There was the chat this week in the markets that Japanese investors would start to buy US treasuries because the yield's starting to look attractive. But instead, don't know whether it's as well as, but they're buying UK gilts. That's interesting. That is very, very interesting. So, watch this space with regards to UK gilts.
Well, talking about top performers this week, then I've got to mention the sterling pound. Last
Yeah.
night in Asia, we touched 1.4005 against the dollar,
Mm-hmm.
and this week we were a hair's breadth away from 1.17 against the euro. And
Mm.
140 against the dollar. We were last year at lows of 121.
Yeah.
Big jump. And also
Absolutely.
1.09 just before the Brexit deal,
Mm-hmm.
1.17. It's a really good performance from Sterling. But there is a little sting in the tail, and I'll tell you about that later on.
Great.
One thing I wanted to mention was one of my companies deals with a supplier in Germany, and I just want to put this out there. And the German company are a big supplier in Germany. They came to the UK, my UK client, and wanted to sign up for a big 18-month supply contract with them. And obviously, my UK people love dealing with these people, but it's the first time some big contracts coming out of Europe,
Mm-hmm.
and Germany's took the lead on it. And it was an 18-month contract. So they phoned me up, my UK client phoned me up, and they said, well, we've got this opportunity to do this. But because sterling's so high against the euro, can we lock that contract in for 18 months? And it's a big contract. And so we were able to lock these rates where they are against their business plan of 110. They've locked in about 600 pips on the FX on their business plan. But
Mm-hmm.
more importantly, yeah, we're great to do that, and we're very good at that. But the point is, Germany, they don't see any more lockdowns coming out, and I've seen a few of these German companies now really pursuing some contracts out in the UK. And this is the first thing I like to see. And the stock market's not just built on sand. This is proper investments,
That's
and Europe's actively looking to starting to trade with the UK again. I've seen it on quite a few companies out there. So that was just what I wanted to say. That, but
brilliant.
it's real, not built on hearsay or what say.
Yeah.
That's actually what's happening. So it's a
Superb.
win-win-win for everybody.
Brilliant.
All going round. A
Absolutely.
little roundup of everything else that went on. The ECB came out on Thursday. They're looking to ramp up their bond purchases going forward. They basically said they wanted to create a favourable financing conditions and potentially bring down the yields.
Mm.
I don't find the ECB that proactive on the economy or the vaccines, to be honest, but I think that's their play. They're going to ramp up the bond purchases. In contrast to that, can I add, Biden, I seen this morning, was looking to have all US adults vaccinated by May. I
Yeah.
don't know if that's ambitious or not, but that's out there. And also, he put pen to paper on it was only $1.9 trillion yesterday.
Stimulus
It's a big
package.
stimulus. It's got to be good for the economy. It's got to be good for stocks. It's only a couple of quid he signed off for. So, but when I checked the negative curves in Europe compared to those US curves, I'm still bearish euro. I'm still bearish. I'm looking for 1.1825. It almost hit 120 yesterday, euro dollar. And I said, what was it doing up there? But this is FX. I'm not always right. But we're down now to 1.1912. We're down over 100 pips. And my target's 1.1825. There was a bit of UK data out this morning. GDP came out minus 2.9. Might sound bad, but it was in January. The market was expecting minus 4. So it was a little bit better. There was a bit of disappointing manufacturing, production, industrial output. But you are looking at January before we went into a lockdown. I don't know how much you can read into those numbers. Too much, you know. So for me this week, top performers got to be sterling, got to be stocks. But this word of caution you mentioned before, overnight US Treasury yields started going up higher again. I'm down 100 pips on sterling dollar. We're down 139.16. It was up at 140 in the night. And also euros down. And then all my stock markets are red, as you were kind of seeing. So is volatility returning to the market? Is it coming to the market, or is it just a Freaky Friday?
I think, you know, just on that volatility piece again, you know, what investors need to be thinking about is that if yields are going up and that's spooking equity markets, pushing equity markets down, where else are you going to go to get returns? Because if the price of fixed income is going down and the price of equities are going down together, diversification is key, and not just a piecemeal glance at diversification, proper, thorough understanding of asset class diversification. There are opportunities out there in the market, and looking at the stimulus package that Biden's just signed off, there's going to be $1,400 checks landing on people's doorsteps next week. And where will that go? A lot of it will be going to the stock market. So it'll be fascinating to watch once again to see what happens.
Wise words.
Absolutely.
It's going to be.
Tune in next week. I think that's the only thing we can say. Tune in next week. Graham's going to be here. He's going to advise you. He's going to give you the information, the in on what's been happening. You take it steady, mate. It's great to see you once again. You take it steady. Have a lovely weekend. And we'll catch up next week.
See you soon for the next bit.